I'm Matt Bishar with NAREIT.com here in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is John Thomas, CEO of Physicians Realty Trust. John, thanks so much for joining us.
Happy to.
Now first, can you start by talking about the recent deals that the company's made and your overall thoughts on the acquisition market for the remainder of this year?
Yeah, so we're, again, a pure play medical office building REIT. So we focus on acquisitions, housing physicians and hospitals and providing outpatient services primarily. We just announced what we're very excited about. We just recently announced the largest direct monetization of medical office buildings from a hospital system provider in the United States, as far as we know, that's ever occurred. It was about a $700 million direct investment by us in 50 buildings owned and primarily occupied, about 93% occupied by Catholic Health Initiatives and their regional hospital system affiliates. So very large transaction for us, very exciting transaction for us, and one that we think is in many ways transformative. We're about to hit our third anniversary, and we started with about $100 million in assets, and we're pushing $2.5 billion today. So good acquisition. The market is fantastic, and we're getting a lot of investor support.
Another one of your recent deals brought your company into New Mexico for the first time. Are there any other markets where you're looking to get into or significantly increase your concentration?
Yeah, so once we get into a market and penetrate a market, we like to add scale in that market. So again, going back to the CHI transaction, one of the exciting things was some nice chunky entry points into the Seattle market, which has always been an interesting target opportunity for us. So we're in 30 states. Our top 5 MSAs, investments are in Minneapolis and Phoenix and Columbus, Ohio, all top 30 MSAs. So we're continue to look at the primary markets, but we also like the secondary markets in healthcare in particular. But there's really no state off limits and no specific state where we're targeting. We're just going to add scale where we have existing property. Speaking
of your portfolio, can you talk a little bit about what you're seeing in terms of tenant retention and occupancy rates?
Yeah, so one of the great things about medical office in particular is it's demand, mission-driven, critical facilities. So physicians and hospitals, once they're in a building, if it otherwise is an attractive location and drawing their patient base in there, they typically don't move or move reluctantly. So retention in our industry, in our space, and what we see should be 80 to 90%, if not higher. And that's the kind of experience that we have as well. So one of the the great things about medical offices, it grows kind of 2 to 3% in bad economies. In great economies, it grows kind of 2 to 3%. So it's not one that you have a lot of variability from a rent perspective, and one where you can move rents in a hot inflationary market very aggressively. But it's a very steady income stream, and in this economy and kind of for the last 9 years in particular, investors have really recognized that and provided a lot of capital to us.
And lastly, we like to put a little perspective behind the real estate that these REITs own. Is there a property in your portfolio that stands out either for its historical significance, what it means to the community, anything like that?
Yeah, so that's a really great question. I think one that stands out to us in that context is in Troy, Michigan. There was a company that GM started in the 80s called Saturn, the Saturn Auto Company. And so Saturn, I think, went bankrupt in the early 2000s, a 170,000-foot building, very attractive building in Troy, Michigan, which is a nice, sub-market within the, suburban market within the greater Detroit metropolitan area. But a few years ago, Wayne State University Physicians Group, which is a very large physicians group that provides the faculty for Wayne State Medical, but they provide amongst 2,000 physicians kind of in that broader market, provide services across the community. So they bought this old building that had no other purpose, that came out of the auto industry, and revitalized it and modernized it, built it out, and then we did a sale-leaseback with them when they finished. So 177,000-foot asset now has a repurpose and a vibrant purpose, and providing health care to that community in a great suburban market, and really supporting the efforts of Wayne State University Physicians Group. So I think that's one where, again, a lot of opportunities to repurpose. Again, that was an old corporate office building. Repurpose it for health care. Health care is going to continue to grow in this country, no matter who the president is, and this is a good way to use real estate that otherwise was vacant and no longer necessary.
John, thank you so much for joining us.
Appreciate it.
For more from REITweek 2016, be sure to visit REIT.com.